Coming from the resident pilot, that makes me feel very safe. Good morning. All right. So far, no crash. All right, so I had to rebuild my little page here on my laptop, switching over to there since the internet went down, but we're all good here. All right. So we got this sell set up in the Russell, and it began to follow through yesterday, and things are a little odd. Well, so the futures are up here. I'm just getting reacclimated here this morning since my internet went down. So in a second, you'll see what's going on. All right, so let's go through it here. So we got this sell set up yesterday. I know some of you in the room got short IWM. We got a nice little retracement up to the 20 after the initial break. And this hasn't retraced very far, but as we talked about yesterday, pre-market, we have this divergence in a sense between markets as to strength in one place, weakness in another. And for things typically to pick up steam, so to speak, in one direction, you usually have markets all moving in the same direction as they were here down at the low at Christmas time. And so now it's been a nice run, and the Russell here has this M top and a pullback to minor support and the retracement exactly to where, give or take a few, ticks or prices or whatever, to where it should roll over and then retest this low or go down to the next level. And so we're kind of in that spot where, okay, take your short, see what happens. Put your stop here, or a smaller position, put your stop, a bigger stop, and see which way it goes. Now, the Qs, different picture, totally negating this red bearish bar, which historically would have followed through to the downside in a pullback, even say 50% or so. And this is where this congestion is, and, could have made this head and shoulders type of bottom. Rather, we've got what is a continuation pattern. Now, continuation patterns after multiple bar runs like this are lower odds, but they can work. I mean, as we say, price is king. And the prices here are saying, I don't care how many weeks up in a row. I don't care about the prior drop here. It's a place to buy, even though it's a little shallow, even though it broke the trend. I'm going higher. Buyers are in control, so on and so forth. Take it up. And so pre-market here, we just got a little consolidation. Well, we can see they're up here and pulling back a little bit, but not taking out the high. So if it breaks below the pre-market lows here, maybe it's down for a pullback. But yesterday morning pre-market, I said odds are with this pattern, we're going to have an inside day. And so it was a painful, boring, go nowhere day. And my two short setups that look fabulous from an intraday trading point of view didn't work. Both of them just kind of held. And when the markets wouldn't give it up, they just moved up and up throughout the day, and, stepped aside at them at the close, and we'll see what happens. And that was Tilray and Caterpillar. So we'll see how things shape up here this morning. But again, Qs here, 180 reversal after multiple bars ups. That says it's going higher. It can consolidate up here, but that pattern says higher. And oddly, this pattern in the Russell says lower. Of course, this could be negated and we get a measured move. But look, the differences between markets like this, where you don't have things together, creates uncertainty. So market's uncertain, I'm uncertain. We look at individual stocks and say, is there a higher probability where multiple timeframes are in alignment in those individual stocks, or maybe the sectors and then the stocks within those sectors? But as far as the market goes, we've got a mixed message here. Transports, somewhat similar to the Russell, up breakdown up into the 20. We're going to reverse, but another inside day. So neutral. Which way is it going to go? We'll see. Transports rarely ever move much pre-market, but you've got a series of lower highs and lower lows. And so just a stall week here. And I guess we're going to have to wait until next week before we really see any defined direction. Spiders, Dan said there's a rebalancing that's going on here. So tough to see exactly or understand what's going on. Shows down a bit. We'll see what this does. But again, same message. Reversal, red bar ignored, complete reversal of the prior week's bearish bar. That what should have happened here this week, even from a bullish point of view, was it stayed above last week's low, and it was an consolidation week down at the bottom of the range. And then this week, the 1, 2, 3 continuation to the downside. And we don't have that. So we'll see what today brings, but same inside day, little tiny range there, open and close the same, complete indecision candle, call it whatever you will. It shows indecision. We don't care the name. And now with this complete reversal, as I'm speaking and talking, thinking about past markets and, where we've had what we call a Christmas tree kind of market. It's not Christmas tree, but sometimes you get patterns where it's red, green, red, green. Maybe that's what we're in for, a consolidation of red, green, of consolidating these gains at this level. I don't know. When things are going sideways, you stand aside, within the time frame that you're trading. So, weekly time frame, if you had patterns like this and you got short, well, now you certainly are in doubt of that bias. And so we'll see, just keep an open mind about what is. And we go through this with a step-by-step process. So looking at this chart in a vacuum, in a sense, would be, I've got a continuation pattern. This week's high is resistance. This week's low is first support. Which way will it go? If it takes this out, it's a go with. Assumption is it goes up to make or test the old new all-time highs. And if it breaks down next week, well, who knows how far down it goes. But from this time frame, this is the simple bias above this week's high or below this week's low. That's your bias for next week into saying, okay, and let's assume that we get another consolidation day today, which would be supportive of this because it's holding up at resistance. Whereas, the same thing, would be more or less Thursday's high, since that would be the breakout of the most recent resistance, and below Thursday's low. Either way that goes today, that's your bias for today. With the weekly looking like this, it's suggestive that it's the daily that would win higher. And we'll just see if we have another terrible inside go nowhere day today. It's going to be a boring Friday, but we shall see. As I say, we take it a step by step. If it's a daily chart, bar by bar, daily, weekly, bar by bar, weekly. And if we're trading on an hourly, well, here we've got a little topping pattern. It's broken support. The next level is really close. So we don't have what we call a tradable void. So at this level here, we see what the reaction is. Does it flip back up, or does it hang down here and open up the door to a move below? So below this level, think short intraday, and we'll see where it goes. No, Alex, please, no more inside days. Yesterday was, painful is an exaggeration, but inside days keep you second guessing. You don't know for sure it's going to be an inside day. That was my assumption yesterday morning. I was hoping it wasn't, because inside days by definition are uncertain, and it could go either way. So every time it looks to make the move in one direction, it stops and it goes in the other direction, and it looks like it's going to go there, and then it goes in the other direction. And so the technical words for all of that is it sucks. Let's hope we don't get another one. All right. Gold had that crack, and so far it's surviving. The weekly is up, but a big down bar. And, after big down bars like this, you look for continuation or consolidation. And so far, this is staying in the lower half, and we'll see what this does next week. Oil, well, wow, that's coming in pretty hard here, pre-market, but it's in an uptrend here. So breakout failure there at 4 o'clock in the morning. And so patterns are pictures of psychology in motion fueled by money. How you like that one, Dan?
I was just turning on my mic to say, repeat that. Here, say it again. I love it.
If I could remember it.
All right, well, let's do it together.
Patterns are pictures of psychology in motion fueled by money, something like that. But this is what it is. We look at this pattern, right? And here was a little breakout failure, and it comes down, and it turns out to be a shakeout pattern here. And then it consolidates. You see that pattern as a technical trader. Your next thought is buy the breakout. The daily's bullish, the weekly's bullish, buy the breakout. And when you see the topping tail pattern, you're like, that's not what's supposed to happen. And you figure, well, that's okay. It can form a bar like that and then go higher. But then when it breaks like this, any short-term traders are going to say, get the hell out of town. And this is what creates this move lower here. So where's it going to go? Well, as technical traders, we look at the next reference point, which is down here. So when it gets down there, we'll see if the buyers show up again at that point, and then the whole cycle begins again. Why should you consider being a buyer down here? Because this is in an uptrend and this is bullish. So with number 57 and a half-ish, that would be down here. That would not damage the daily time frame, but we got a little bit of a bearish day going on here so far in crude oil. And bonds, flip-flopping back and forth. We got a downside shakeout, similar pattern, different market. People trade these markets, whether it's Apple Computer, bonds, crude oil, soybeans. It's, again, psychology in motion as to what thoughts are and beliefs and multiple time frames. So bonds broke down, they retraced back up. So far, they're consolidating, forming a shakeout pattern, which is suggestive that they go higher. S&Ps, just hanging up here, wiggling around, and they came so the top of the range so far. And let's duplicate that. And we got a bottom of the range. So that's our trading range. Below here, think short. Above here, think long. Pretty simple. Friday, I don't know any news that's going to drive this market at this point. Who knows? But right now, it's just a choppy consolidation. And it looks like it could go higher based on that. But right now, there's indecision. Right? Longs are a little nervous, and shorts. I was short yesterday. I'm a little nervous about shorting again, especially, I'm not shorting the market, but I was shorting weak stocks, and they just held up and wouldn't go down yesterday. Qs, same story. So far, just an inside day. It's early in the day, but this took out that high. So the most bullish of these markets, and but trading range, same situation. If you're an intraday trader, stand aside. Don't trade this. You're going to get chopped up. Does it stop here? Does it go down here? Whatever. Wait to see if it holds the middle of the range and breaks out. Think long. If it goes down to the bottom of the range and buyers will show up and it breaks down, think short. Right? It's that simple. How far should you think short? Not too far. But as an intraday trader, you don't need a lot of space for it to go. But, the next level is down here somewhere. But you're trading against this weekly daily trend. But as intraday traders, trading one instrument. So if you are trading NQs, years ago, it's all I traded was NQs and YM. That broke down, I would short it. And I got in perspective of what I'm dealing with. That's the big takeaway. Put in perspective of what you're dealing with as an intraday trader, as a daily trader, or an investor. Lastly, the Dow, right? Picture of weakness here. It's breaking out so far, topping tail range. The short takeaway of this pre-market is things are a bit of a mess right now. It's Friday. Enjoy the weekend. Maybe if things don't shape up in a direction in the next half hour, take off, go do something, and stay out of the mess, and don't become a commission generator. That being said, all yours, Dan.
All right, thanks. Good morning. Yeah, it's the quarterly witching day, so that's going to add volatility. And I got an email yesterday, somebody asking me, do we have a bias on days like this, a fund accumulation? And, you know, he was asking all these questions that my answer was the same. I said, we don't think that deeply about it. We just trade the charts every single day. And then I did say the last hour, particularly the last half hour, is going to be, you know, typically very volatile. So, you know, stay away from it, take off, but we'll still swing trade based on the charts. End of story. Opens here, Echo Alpha. We have one put spread expiring today, one next week. LYV, we're still long stock, 2/3 of a position. HCSG, my minder shows it down $1.14. We're short stock on this no-brainer breakdown. We've covered 1/3 is all. And if it is gapping down 114, I can't tell on my pre-market chart, there's no volume. But if it is, we're going to cover another third. Tyson, I showed up 64 cents, but again, I don't see any volume going off. So we have a covered call, and that pattern looks great. Triple V, we're short stock. We've covered 1/3 already, trail stopping the rest. Boeing, we had the put spread, and I gave it a real tight stop for half yesterday. So we, right on that tail, we stopped out of half, and my back half stop is under 371. I gave it another $1 or so under here, but we're short the 360s, way the heck down here. That expires today. So just taking the overnight risk, this should be less. It closed at 26 cents midpoint. Well, you know, we'll manage it as posted. Ozark, we are not in yet, but I still like that if it takes out last week's lows. Otherwise, forget about it. CMA, we're short stock with a tightened stop. CGC, a pot stock, we're short a half lot. PYX is just a watch in the cannabis sector for me. I didn't trigger it with that big top and tail, but if it can go sideways, it has juicy puts. DBX is gapping up here. Actually, it's gapping to our lowered stop. We covered 1/3 into 1/3 or maybe 2/3 into weakness. I got to look. And I raised the stop over this pivot, but that's still at a profit. So we'll, you know, keep a 5-minute high stop on that. Cisco, we're short and out of the money. Put for next month looks good. IWM, we have a bear put debit spread. So that's a mildly bearish directional trade with positive time decay. CAT, we're short stock from yesterday. My stop was a little bigger than Greg's. I gave it over these tails, so it held. VIAB, we shorted stock yesterday. Now it's a 1, 2, 3. You can add under yesterday's low. KHC, we're not in, but it's a weak animal. This is on my short watch list. Hey, Greg, you're just going to panelists. Snap, yeah, I mentioned yesterday that they could have bought it right here at, I think it was 1080. It was right here in the morning. I said, yeah, buy it, stop low. And I told them my target was 1150 to 12. And it looks like it's headed there today, this morning. Cyber, this is just on my long watch list. Yeah, that was right at the market open. Yeah, that was one of my favorites. I don't know why I didn't post it, but I verbally told him. Golf Tango, we're short stock. Urban did not trigger. I gave it under the day's low, so we'll see if we can get an entry today. FICO, one of you mentioned this yesterday, and I said, maybe a day trade, it looks higher. I wouldn't personally swing it, being up 4 or 5 days. PayX, same. These came from you all. I forget who, it doesn't matter. All right, some gappers here. Here's a gap breakdown, 31.16. There is some support over here, but the weekly suggests that it could go lower. So I like that as a watch. Put it in a little window if it can't bounce or gives us a sell setup or maybe double top, whatever. Gapping up 39 bucks, gapping out of this mess. Now, there's no way I would buy it, with a run here, 1, 2, 3, 4, 5 up days. And it's not really a good gap and crap pattern. All right, I see our Boeing here, but our stop's under 171. And again, it's still going to be at a profit. GDS, 36.40. All right, so that's a bullish gap. I like that. Let's see how that sets up, maybe for a day trade. That looks good. I'll put that here. FTI 2360. It looks like trades like an ADR. You might get a day trade out of it. It's a bullish 15-minute pullback here. That's a day trade idea. PHIIK gapping down. That's a bearish gap down. It looks like maybe to all-time lows, but I don't short penny stocks, so you're gone. Daku had a much bearish gap when I looked at it this morning. Now it's filling the gap, which is strength. We'll keep an eye on it. Zoom Z, nice engulfing after upside shakeout, gapping down 2250. So it's way down here. Let's keep an eye on that. That might set up ATVI. We've got less than a minute to go, gapping up out of a very sloppy base. Could be a put spread candidate. I wouldn't touch it as a directional, but that might set up. RKDA 850. That's a bullish gap. It trades like a wild penny stock, but we'll keep an eye on it. Here's this TRTX gapping down here, 1964. That's a bearish gap under all of this. You could short the pre-market low. If this goes sideways and can't bounce, this pre-market low is a beautiful short. Target here, low 19s. ATOS, bearish gap into a big old bar. It looks like a penny stock toy. I got no interest in that. HIIQ, bouncing into this ugly